Hello there guys, what is going on? Welcome to Pure Trading. It is Friday, the end of the week. I hope you all had a great week and looking forward to another good week next week. Before I get started here, I want to remind you, trading is dangerous. I'm going to go through all the major pairs here, starting on cable, and then I'm going to show you something at the end of the video on the euro versus the dollar. There was a nice entry, the usual stuff, and a little bit of a surprise there as well. So stick around for that one. Starting off on cable. So usually we start off on the daily, we have our envelopes and everything to guide us, and then also we see if we have anything to the left of our charts here to find out whether we have some points of interest that has become interesting again for traders. Now this is Friday, that's today, Thursday, and then Wednesday, Tuesday, Monday. Everything just keeps going down, and remember, we are bearish on everything else against the dollar here. We are bullish on the yen, we are bullish on the dollar, we are bullish on gold, and we are very bearish on commodity currencies, including the Canadian dollar. But this here is the cable, and this black bar here, this is the daily bar. This is Friday. You can see it starts up there, it goes up, and it just crashes down. But there was no entry on the beginner strategy for this because we are looking for extensions beyond the mean here. So if prices are above this envelope or below the envelope like it is here, to become interested in the trade. But as you can see here, there is nothing. We are bearish, and it didn't come on the top here, so there was nothing to trade based on the beginner strategy at all. And then on the yen, this is the one that I've got a lot of emails and requests about. The thing is that we were at a good level. That's 1, 2, great level, and there was an extension beyond the mean right here. What happened here today really, but it started breaking through the envelope yesterday, which is Thursday. Remember, this candle is today's candle, so it goes all the way through, right through this. But let's, for argument's sake, look at this candle here and see what happens on our 15-minute. So this is the area, so just notice this for me. Yeah, this is the area in question here. It comes into the level of importance. Now watch this. It comes in, it creates a high. And look at what the RSI is doing. The RSI is actually giving us a clue here that we are not ready yet for that break short. The reason for that is because the RSI is also making that same high. So we are not taking the trades going short here at all. So prices keeps on going higher and higher. RSI makes highs, higher highs. Then this one here, let's take for argument's sake that this here is another one, higher highs but lower. Yeah, here we see the RSI at that same point here is making lower lows here. Yeah, so is this an entry? So it could be an entry. You could look at it like this. There is a trend line here, and you placing your entries somewhere breaking the trend. Your stop is here and you get stopped out. So that is one losing trade if you were looking at it that way. The other way of looking at it is if you look at the area that we are at. I'm going to highlight that whole area, and then going back to the daily chart here now. You can see that this is the area here. So it's beyond the mean, and looking to the left, there isn't anything to the left. Yeah. So we don't have anything to the left. So at that point when the RSI was happening on your 15-minute here, there was nothing to the left here on the daily. So there is no, you know, it doesn't form part of the strategy. But these are things you're going to have to learn, and you're going to have to, you know, take that trade there and lose and then find out why. So there were people that asked me Was that a valid entry? And I like the question, because the thing is, it was questionable. There was a setup on your 15-minute, there was an RSI, but on your daily there was no point of interest to the left here. Moving on to the CAD. So remember that we are bullish on the dollar. So prices has been coming down all the time here. So we are not interested in the sells at all if we are looking at the fundamentals and if we are looking at sentiment. But if that's not of interest to you, then this would be a technical setup for you. So prices comes up into a level of importance, and then on your 15-minute, do you get anything? Not really. You get your multiple tops here. This is Friday's trading, this is Thursday, then let's say about Wednesday, in between Tuesday and Wednesday, you get this sort of RSI divergence here. Not the perfect one. You get your multiple tops there, and then what you have here is RSI pointing down. However, we are not, or I am not, bearish on the dollar here. Let's look at the 15-minute chart, because we are at a point of interest now coming in at the end of the day. This is your daily, and it isn't the perfect level, but there is an extension, and this here is a qualified level there. Yeah, you do have that. It's not the best. It's not the best. Let me show you how I'm trying to justify this level. If we take this trading range from year to year, and we are bullish from there all the way up to there, you can see that this here is your 50% level, and then in between this 161.8 and 78.6, that is a valid area, a valid point of interest for us to drop down to the 15-minute and then try and find an entry in that area. Yeah, so the RSI helps us with the entry, but as you can see, there was no setup there today for Friday on that pair. Then the Australian dollar versus the dollar. Now remember, we are bearish on Australian dollar and we are bullish on the United States dollar. This is Friday. So Thursday, there was an RSI divergence. If you look at the price on Thursday there on your 15-minute, you can see that we have prices going up. Let's highlight it on the daily quickly first. Yeah, so that you can see the area. So step number 1 is to try and highlight when prices are at a point of interest. So you can also take this here, because that's more my sort of point of interest, but you can take the previous day as well. So it's the Thursday and it's the Friday. Yeah, Thursday, Friday. So this is your point of interest just coming up there. We're just missing the point of interest, and prices are making higher highs up there, and then at that same point you can see prices are making, the RSI is pointing down. So this is a valid setup. So the safe way of doing this is to try and find yourself a trend here on your 15-minute and then go through the break of the trend and then retesting if you want, or you can just trade the breakout strategy going short, or you can wait for a retest. But the issue is that your stops would always need to be above the area, not too much. 15-20 pips above the highs there are enough, and then you are trading short. So that was a good one. And then even better was on the New Zealand dollar. You can see that this point of interest is much better. So if you had to choose between the two, it would be obvious here that the New Zealand dollar was much easier to trade. So we have an extension beyond the mean coming in on Thursday. And we have a level that's denoted here by this last week, and a few months ago here we have some more at that same area. See if you can look there. See, so your point of interest is becoming more and more interesting. So it's just easier for us to spot this. So that's my Thursday candle, that's my Friday candle. So let's see how this thing plays out on your 15-minute. much better and much easier. We can see highs here, and we have higher highs, and the RSI is pointing downwards. That's going up, and the RSI is not. See, the RSI is pointing down. So this is the good area. And then also see if you could find yourself some sort of a trend there, so that you can crash through the trend, putting your orders at the bottom here, putting your orders somewhere here, and then going short with your stops nicely tugged away above that. Also, another thing with the stops, if you can zoom in a bit here, and if you see that you have just highs that are very close, that you would like to tuck your stop away, you could put the stop away up there as a more prudent way of trading this. And you can always, as your trade is moving towards your target, you can always just move your stops down. If you want to learn the strategies and stuff here, the beginner's course is entirely free. You can do that on your own time. And if you do it via the course here, Pure Trading, you go to puretrading.blog, then I'll be able to sign the assignments and things that you've sent me, so that I can make sure that you know exactly what you are doing there before moving on to any next lessons and stuff. So here, as promised, this is the one that I was talking about, the euro versus the dollar. So the euro versus the dollar was a nice one. We are bearish the euro, and we are bullish the dollar. That is just our premise for almost every trade that we are taking on the majors here. So Thursday and Wednesday prices are coming in through. It's coming in through an extension beyond the mean. Yeah. So is this a point of interest? That is the question there. So the thing is that if you find out from where the trading range begins here, yeah, so you can see what we have is a trend coming down here. We can see that this is a trend coming down. It's starting all the way from up in this area up here. We can see that there is a trend here. It's a trend starting from that point there. We can see the highs, prices comes down, it makes a low there, prices goes back up, and then it comes down, it goes up, it comes back down, and then up again, down. So we can see that there is a nice trend going on here. That's your lows, and that's another high. But the area that we are looking at, the area that I am trying to focus your attention on here, is going to be this area here, the last swing here. So, and also trying to find out if this here is an area of importance, if that short happened in a qualified zone, in a qualified point of interest. So if you pull it all the way down to the back here, you do see that there is some small piece of this wick here that corresponds to that. So this is an area of importance based on it being a level of importance, based on it being an extension beyond the mean. But is there another reason? Is there another reason for us to become interested in this area? And I'm saying yes. We have this swing up here. Prices goes down, up, and it goes up all the way to this area here. And that from all the way down to that bottom area. So this 61.8 to that 786, yeah, that there is like a sweet spot for a retracement. There's going to be a lot of selling interest in that area. So the last leg down here, yeah, we are looking to go short because fundamentally we are short. We are looking to go short after a nice decent retracement, and this retracement comes in between 61.8 and 78.6. So that's your sweet spot. So there's a whole lot of different names and things that people gives this area of importance, but it doesn't really matter. If you can line more of these things up, it just helps you with your confidence in pulling the trigger there. So let me just take that away there. So this is Wednesday and Thursday. So if we look at the RSI here, yeah, that is the highs and the lows here on those 2 days. Yeah, prices are making higher highs there. Going down to your 15-minute now. Here we can see that is your Thursday or Wednesday and Thursday. And just notice here that your RSI is pointing down. So this is like the perfect RSI setup over there. Now here is something that I also found from ICT. He uses this something that he calls the kill zones. People terms these things all differently as well. Yeah. So it's just got to do with the time of day that all these things happen. So this blue is the London kill zone or the London time period, and then this green zone here, this is the New York zone. So at the start of the New York zone here is there, yeah, on this time on my chart here, it's 1 o'clock for me, 1 o'clock Switzerland time. But if I change this quickly to, let's make it London time, yeah, that's 7 o'clock London there, 12 o'clock London. So if you look at this here, London comes in on 12 o'clock, and then within that period, it first makes up a false move going long, and then the real move going short. So for us being short the euro, this move up was a good one. And as it's moving up, it's creating this RSI divergence. So for me, the setup in this area is just, you know, it's just perfect. Another thing here, if we try to see if there's any try to see if there's any Fibonacci number that's important here. So we're taking from this high to that low there. So that is a 127.2. Now this number comes from the Fibonacci queen, and she likes using the 127.2. She likes using the 786, the 61.8. So it's all these things that gives you confluence to be able to pull the trigger on these sorts of trades. So the idea behind it is just finding out on your daily if the area is important for you or not, based on whatever you find important, whether it be levels, whether it be Fibonacci, whether it be extensions beyond the mean on envelopes or Bollinger Bands or whatever it is. So just build yourself a strategy. As I said before, here's a free one here on the beginners course. You can test it before using it on a real account, and then you know, I'm sure that if you test and become more confident with this strategy, things will start turning around for you. Guys, that's all I have for you today. On Sunday is going to be another market outlook, and as usual, trade safely and prosper.